Hello, everybody. Welcome to our weekly Tuesday post. I'm Kim LaRue. I'm here with Lee Duffy.
Hi.
And we've got all these looming financial crises going, so let's get into it. Music. So there's a lot going on in the market this week and last week, actually. So we've been talking about how our products can help you avoid losing money in this type of situation. This is a discussion we need to have today, right, Lee?
It certainly is. What we want to do is we want to talk about how the MKT risk index has performed since we had the alarms from last week. And what we also want to do is we want to show you why a bank contagion isn't a surprise to us.
Sounds interesting. Let's see it.
The MKT risk index has been high after the alarms that we had from the prior week. The alarm has come down, which is what we'd expect it to do because it warns you when something is about to happen and has a time period on it, but then calms down after that.
Though this past week, whenever we had this whole SVB thing and the Credit Suisse thing, and as the falling out happened, we had multiple spikes, right?
We did indeed. And we can show that on a chart because we can go back to the prediction we made last week. Should we do that?
Let's do it.
Last week, we talked about giving a prediction on Euro US dollar, and MKTGhost was showing this set of flows around this blue line, which is the actual time in the last video that we did. What we didn't show is that we had several alarms from the MKTRedline product telling us that we had quite a lot of risk suddenly appearing into the marketplace and people should take caution. This is Euro US dollar. It's 80% of the traded volume in the ForEx market, which is $5 trillion every day. And it moved a long way, but it moved straight into the forecast area. If you recall, Kim, I showed that it might go all the way up to 1.085, but my main prediction was it would go up a bit, might get that high, but it was going to come down all the way down to 105. And look at that as a prediction.
We're talking about, 3 decimal points out from a number.
What I've shown here is that we get the alarm and we get the big movements. And that's one of the key reasons for owning the product, right? What's happened this week is more important. And I'm going to show you why that's no surprise to us.
We see those 3 spikes and then that drop. That's a reason to have MKTRedline, right?
Absolutely. But it could have been a lot worse. We could have seen much bigger moves in the marketplace. So big, in fact, that they may have gapped. And that's the real risk that traders have. They can't get an exit because prices gap.
So Lee, what you're saying here with these 3 spikes that we have and then this drop right after that is MKTRedline gave every user a warning. And this is a big one. I don't think we've ever seen 3 in a row like this. So it was saying there was something huge going on.
That's right, yes. And it was a significant warning and we're still in that warning period.
And that's why you want it. Hey, that's a sales job right there. That's why you want this product, right? But I mean, really, this is why we're trying to help people. We're trying to keep people from losing money. And that's why it exists.
Yeah, and MKTGhost has been useful here because it's given us an idea of where it may have gone, what direction it might have gone to. That was the basis of the prediction I provided.
Yeah, so using the 2 together, of course, MKTGhost is in a private beta. We're still using it and fine-tuning it in-house, but being able to use these 2 together, we not only saw that there was going to be an issue because of the spikes of MKTRedline, we also saw literally exactly where the price was going to go to. So with all we're seeing in the markets, let's take a look back at what we were seeing historically.
So if we look at this particular chart, what we're plotting in the blue line is the S&P. What we're plotting in the red markings is the warning zones.
All these red lines, those are MKTRedline spikes where users would have been warned that there was something going to happen?
Yes. There's 2 parts: capital destruction, capital creation. Capital creation in white, capital destruction in gray. And as you can see last year, an awful lot of the time was in capital destruction. And of course, it takes a period of time before it manifests in the main economy. A banking crisis, it's no surprise because the banks are the people that lend the money out into businesses. That's the way our economy works. And it's no surprise given that we've spent most of last year, 2022, in capital destruction mode.
Okay, so whenever you say we spent it in capital destruction mode, what you're saying that this chart is a representation of our risk index. So we were above that magical 41 number that says we're in that mode, we're in volatility, we're in capital destruction, right? One of the things that I think is important to stress here is that if you have money in the market, if you got a 401k, each one of these red lines represents a spike on the MKTRedline gauge. 72.27% of the time, that is correlated with a 2.5% drop in the S&P 500.
Or more.
Or more. Or more. That's important, right? So that means if you see a spike with MKTRedline, regardless of who you are, if you're a professional trader, if you're just somebody that dabbles in the market, it's a good time to move your money out of equities somewhere else for a few days. Because what we're trying to do here is prevent you from losing money. We wanted to show you on our actual MKT risk index that you get with the trader version that the number was above 41 for most of last year. We were seeing a huge amount of volatility, a huge amount of destruction of money. And this sort of told us we were leading up to something big, right, Lee?
That's right, yes. And, it's no surprise that we're getting issues with banks who are the main lenders of the money that do the creation.
So when we say destruction of money, we're talking about people defaulting on loans, like big defaults, things like that. So that would put those banks in peril, right?
Absolutely. MKT Risk Index works on a global scale. So when we see these very large numbers high on our charts, they are gigantic sums of money that are disappearing out of the economy through a deflationary process.
And in last week's video, we showed the US dollar euro number just absolutely spiking right before the SVB bank collapse. So there's a lot going on even just outside that one bank, because one bank failing wouldn't really be enough to make a spike on our index because it's looking at the entire equities market. But that meant that there was also a ton of money being destroyed. All right, it's prediction time. So I already said last week, Lee, you nailed it with that one. What is coming up?
So I think we're going to see a bit more of a euro long. As you can see from the chart, it's been heading up very steadily since the crash that we saw based off of the warnings that we mentioned earlier. The product is indicating somewhere between 1.082 and 1.084 for this week. And then we would expect to see a little bit of a pullback later in the week.
Okay, so we're looking from going from where are we at now?
So we're currently at 1.075, and we're expecting it to get to 1.082 to 1.084, certainly in the next few days, and then we should see some sort of pullback after that.
And going down to around where?
Probably no lower than 1.069.
Okay. And I think we need to also say that what we're doing here is showing the tool to the world to prove that it works. We're not giving trading advice. I think that's important to say because, we're not people that are qualified to do that. So, you can take what we say, but we could be wrong. You never know. The point is we're trying to prove this so you have some faith in our products. We don't want you to run out and start putting money on these things right now, We don't want to get in trouble. We don't want you to get in trouble, right? One of the things I said last week at the end of the video was that you didn't have to like that video, but if we got the prediction right, like this one. Well, if we did, we'd appreciate that. We'd also appreciate if you did like and subscribe now, but we really want you to come back also next week and check to see if we were right on this. And again, only fair that if we are right, how about a like and subscribe then? And there you have it, everybody. Predictions, a little bit of information about the market, a little bit of information about the products. Check back next Tuesday, and we will see you then. Thanks a lot.